Hey, it's Mike, and it's Monday morning. It's time for your Monday morning mortgage update for the week of November the 18th. I hope you all had a great weekend. Winter's here, it's cooling off, and God, we got some storms coming up. What a big economic river is coming through, so we'll expect a lot of rain. Can't wait. So let's talk about the market. I always try to give you tools, tips, tactics, things that you can use when you're making a decision on buying or selling a home, advising people on buying or selling a home. What's going to affect the market this week? How is it going to impact mortgage rates? And what are we looking at even in the future? So let's talk about last week and then what's going to happen this week. So last week, we saw a 49 basis point sell off in the market. So when we look at mortgage rates, we have the cost of that rate and we have the interest rate. And we saw money flow out of the bond market. Let's go right to the chart so you can see the visual here. And if we go back last Monday and we look at the money flowing out, this downward movement in this mortgage-backed securities chart, and this shows the trading of mortgage-backed securities in the bond market, that downward movement means money flowed out. That means rates went up. The week before, we saw an upward movement by 49 basis points. So in 2 weeks, if we go Monday to Monday, we saw rates get better, and then we lost all those gains last week. So it's a flat 2 weeks. And you can just see all the movements on these candlesticks or these bars, which show 1 day of trading in the bond market. Just a ton of volatility, which has just been the theme for so long, up and down, up and down. So why did it do this? What happened? Well, two things. We saw inflation go up. The rate of inflation actually is slowing down, but inflation is still going up. It's still costing more for us to buy eggs and milk. That cost has been going up for quite some time. We're going to talk about what the rate of inflation compared to actual inflation. And we saw the economy slowing down. Yes, retail sale numbers came out last week that showed retail sales were up, but the inside numbers on those didn't look good. Bond traders pay attention not just to the headlines, they look at the details, and we're buying less stuff. So that means a weakening economy and inflation's going up. You know what that's called? Stagflation. And that's not good. And that's not good for bond traders. It's not good for our economy. We don't want stagflation. Inflation is bad enough, but weakening economy and inflation going up, not good. So we'll talk about that. So what are we looking at this week? It's going to be a really light week this week. Not a lot of things that are going to impact the movement of rates unless we see something unexpected come in. But I want to pay attention to really two things: inflation, stagflation, and then political. So let's talk about political because it absolutely is moving the markets. We know who the president is. And in 2 weeks, in the last 2 weeks, he has basically appointed most of his cabinet. Now, all those people have to be approved through the House and the Senate, but he has made decisions, and it's already causing movements in the market. Kennedy got appointed for Health and Human Services, and the pharmaceutical stocks took a dump last week. So it is affecting the market. The one thing that he hasn't appointed, the one person he hasn't appointed, is to the Treasury. And I've said this for quite some time. It's not so much who gets elected president, it's who's going to be running the show, who's going to be pulling the cords, making the decisions. And the Fed chairman and the Treasury secretary are very important. The Federal Reserve, the Fed chairman, that sets economic policy basically, and the Treasury pays the bills. So we're going to have a new Treasury secretary. He hasn't made that appointment yet. It absolutely could move the markets, and this is going to have an impact on cryptocurrency, how that is managed, debt, tariffs, just a ton of things. And so we could see this appointment this week, and that absolutely could have an impact on the bond market and ultimately mortgage rates. The second thing is stagflation and inflation. We've been throwing these terms around. What is stagflation? What is inflation? So we know inflation is basically the cost of goods going up. And I want to show you a really impactful chart that gives you kind of a representation of inflation. And so what this is showing you is two lines, the red and the blue. The red line is the change, the rate of change. So is inflation going up or down, or is the rate of change going up? So you hear these headlines in that people are talking about the rate of the inflation's coming down. Inflation's coming down. That's not true. Inflation is going up. It's just not going up at as high of a rate of change. So if you go over to the right-hand side here, you can see the rate of change went way up, right, during COVID. That's 2020. During COVID, the rate of change just shot way up because the government was putting billions of dollars into the economy. And then the Federal Reserve started raising the Fed fund rate, that short-term interest rate that you hear them talk about. And that Fed fund rate started causing the short-term rates to go up, and that is a way that the Federal Reserve can set policy to fight inflation. And the rate of change started to go down, and you can see this looks great, right? The rate of change is going down. That means inflation isn't going up as much. The blue line is the cumulative effect on us, on you and I. What are we paying? So even though the rate of change is going down, we're still paying more for everything, and that's the impact. That saying that if an incoming or an outgoing president is running for an election, we saw it with George Bush Sr. And we just saw it with Biden. Economy. It's the economy, stupid. That is the thing that really drives most of these decisions on who we're going to elect as president. And we are all feeling the impact of inflation. We're all feeling it, and that is what's driving most people's decisions. So we want to look at those numbers, not necessarily that inflation is coming down, because it's not. And that's what happened last week. The rate of inflation is coming down, but it's still going up. It's still going up. So the other thing is stagflation. So stagflation is when we have a weakening economy and increasing inflation. So people are making less stuff. They're getting laid off. They have less savings. It's costing them more to buy stuff, so they buy less. And the cost of those goods are still going up, 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 and up. And the bond market does not like this. And we know mortgage rates are determined by the trading of mortgage-backed securities in that bond market. So if we see stagflation, it is not good long-term. How do we get out of stagflation? A rapidly rising economy. Could we see it in 2025? Sure we can. One thing that I've been telling everybody is, when the government makes these changes, when they increase rates or cut rates, it doesn't have an immediate effect. It takes time. It takes time. I mean, the Federal Reserve has been raising the Fed fund rate for quite some time to fight inflation. We're starting to see it have some positive impact, but it didn't happen overnight. It's taken a long time for them to do this. So if we start to see a rapid rising economy in 2025, yeah, that could absolutely fight inflation. One of the biggest hedges against inflation is home ownership. One of the biggest hedges against inflation is home ownership. And I want to show you another graph of the net worth of a renter versus a homeowner. And this is a really good thing to look at when you hear all the news. I hear these people say, don't buy, you should rent. Rent's more cost effective. Look, you want to stay within your budget. There's no doubt about that. But you cannot argue about the net worth of a homeowner compared to the net worth of a renter. And this shows the comparison from 2019, 22, and the estimates for 2024. There's no argument. There is a significant difference in your long-term net worth by being a homeowner as opposed to staying as a renter. The only person that's gaining net worth when you're a renter is your landlord. So if you really want to look at that long-term growth, that long-term net worth, really you need to buy a house, hang on to it long-term, and really gain that wealth over time. So what are we looking at the market this week? Again, it's going to be flat. We expect it unless something unexpected happens. So we're floating starting into this week, obviously moving to a quick lock if we see any changes. Have a great productive week, and let me know if you have any questions. Share it with somebody that can benefit from this. Let me know what you think of this video, and we'll talk soon.